Hello everyone, so today I'll be talking about Bitcoin. Now this video follows my first video that I've made about Bitcoin, which I uploaded to my channel on the 22nd November 2020. That time it was in anticipation of Bitcoin reaching its previous 2017 high of the USD 20,000 level, which it managed to do so on the 17th of December 2020. And within the first 2 weeks of January 2021, it has created a new all-time high of close to the USD 40,000 level. So if you're new to investing in Bitcoin and would like to understand more about Bitcoin, you can check out my first video first, which I have linked to in the description section below. In that video, I briefly mentioned Bitcoin, how it is created, how it works, and why investors would want to invest in Bitcoin. So you can check out the video first before continuing with the rest of this video. A couple of things have transpired since I uploaded my first video, so let me start this video by looking at a few key events that have affected the prices of Bitcoin. Let's go! The first chart shows the performance of Bitcoin over the long term since its inception in 2009 until the 15th of January 2021. So you can see that the price of Bitcoin is on an upward trajectory over the long term. The second chart of Bitcoin shows the performance over the near term. We can see from the price in June 2020, it has moved upwards until a high reached in January 2021. The blue line is the price of Bitcoin, while the green line is the 20-day moving average of Bitcoin's price. So we saw that a few days ago, Bitcoin price has dipped to a point where it is close to the 20-day moving average before rebounding again and moving further away from the 20-day moving average. On 17 December 2017, Bitcoin hit a multi-year high when it traded close to the 20,000 US dollars level. However, a few days later, on December 22nd, Bitcoin fell below $11,000, a fall of about 45% from its 2017 peak, and within a few months going into 2018, it lost 80% in value. Looking at more recent times, in mid-February 2020, before the global COVID-19 outbreak, Bitcoin had been trading near the $10,000 level. Then, as the virus affected global markets, investors panicked and gravitated towards the safety of cash as a risk-free asset, causing the price of Bitcoin to drop to as low as $3,850 US in March 2020. It did rebound slightly by the closing of US markets during the period, but overall Bitcoin has lost about 50% in value in one day, while other cryptocurrencies like Ethereum also recorded close to 40% loss during that period. Eventually, Bitcoin recovered. In the second half of 2020, Bitcoin started a bull run due to strong investor demand from large funds and companies. Data firm Chainalysis reported that investors who bought at least 1,000 Bitcoins and have had an account open for less than a year were the ones that have been driving the significant demand for Bitcoin since September 2020. Then, just last month, on 17 December 2020, Bitcoin managed to record a new high when it breached the 2017 high of around the $20,000 level. It reached a high of $22,805 US. This happened after the Federal Open Market Committee, which is a committee within the US Federal Reserve System, issued a statement that it commits to continue carrying out its bond buying program, whereby it will purchase $120 billion US worth of bonds from the open market every month in order to keep the federal funds rate within the targeted range of 0% to 0.25%. Because of this statement, more institutional funds have started increasing their investment in Bitcoin in the hopes that a limited supply of Bitcoin can help to protect their portfolios against inflation. Within less than a month, entering 2021, Bitcoin has gained by more than 100% when it surged above the 40,000 US dollars level, creating a new all-time high of 41,962 US dollars price level on the 7th of January 2021. The market cap for the entire cryptocurrency sector topped $1 trillion US on that day. For those lucky investors that bought Bitcoin during the March 2020 lows, they would have made almost 1,000% in gains if they hold Bitcoin until that point in time. A few days after the new all-time high is reached, on 11 January 2021, quite similar to what happened when the 2017 peak was reached, Bitcoin reversed direction and fell by more than 20% within 1 to 2 days to trade around the $30,000 level. It even reached an intraday low of just above the $30,000 level, temporarily halting an unprecedented rally. This occurs as a rise in long-term US Treasuries lifted the value of the US dollar and caused money to flow out of alternative assets like Bitcoin. On the same day, the UK Financial Conduct Authority also warned investors against lending or investing in crypto assets, saying that they should be prepared to lose all their money as there is significant price volatility and it can be hard to value crypto assets reliably. However, within the next few days, Bitcoin has seen a rebound in its price and is trading close to the USD 40,000 level again. So what should be the fair value of Bitcoin? For stocks, stock prices are derived based on the cash flows and earnings potential of businesses that own assets that can be deployed in business operations, while for gold, it can be made into jewelry or it can be used in industrial applications. But Bitcoin is just digital currency sitting in virtual wallets with nothing backing it up. So yes, Bitcoin has no intrinsic value. Its value is just dependent on how valuable the market perceives it to be as a store of value and a medium of exchange. So it is completely dependent on the laws of demand and supply. First, let us look at the supply of Bitcoin. The creation of new Bitcoins is halved every 4 years until ultimately there will only be a maximum amount of 21 million Bitcoins in circulation, with the last Bitcoin being mined in the year 2140. So, the limited supply of Bitcoin, it helps to protect against inflation. This is in contrast to your fiat currency or your paper money, which can be printed in unlimited amounts at the central bank's discretion when it chooses to pursue an expansionary monetary policy. The act of printing new money leads to an increase in the supply of money, and if this growth in money supply exceeds the growth in the production of goods and services, then there will be inflation, which reduces the value of your currency. So because of Bitcoin's scarcity, it has drove institutional investors to put their money into Bitcoin to shield their portfolios against the effects of inflation. The strong surge in the price of Bitcoin towards the end of 2020 has also triggered the fear of missing out, whereby more investors pile their money into Bitcoin with the hopes that they can still ride on the bullish Bitcoin wave and make quick money. So with Google Trends data, it has showed that the global search interest for Bitcoin has more than tripled from early October 2020 to early January 2021, indicating that there is strong retail interest in Bitcoin. Other than the strong market demand, we can also look at how market liquidity influences the price of Bitcoin. On 2nd January 2021, Glassnode researchers stated in an article that there are approximately 18.58 million Bitcoins in circulation, but 78% of it is classified as illiquid and barely accessible. So only the remaining 22%, which is about 4.5 million Bitcoins, are available to be traded on cryptocurrency exchanges. The researchers stated that over the course of 2020, a total of additional 1 million Bitcoins have become illiquid, as investors are increasingly hodling Bitcoin instead of wanting to trade it on exchanges. So this thin market liquidity coupled with strong demand have been powerful factors in driving up the price of Bitcoin towards the end of 2020. Another factor that would determine the value of Bitcoin would be the relative returns of other assets compared to Bitcoin. When investors decide whether they want to invest in a particular asset class or not, they will look at both reward and risk. So if they take two asset classes together and they see that one has a higher reward to risk measure compared to the other, then they would invest in the former one. Let's take an example, Bitcoin and US Treasury bonds. If US Treasury bonds, their returns rise to a point which makes them more favorable than Bitcoin, then people will move their money from Bitcoin to US Treasuries. Yes, US Treasuries, they have low yields, only single-digit returns in a year compared to the Bitcoin, which can give you triple-digit percentage gains. However, US Treasuries have lower volatility. So if you look at a reward-to-risk ratio, then US Treasuries may just have a better reward-to-risk ratio compared to Bitcoin, as long as the returns on the US Treasuries rise to a point enough to justify it as a better asset class. So this was what happened on 11 January 2021, when there had been a rise in US Treasury yields to a point that it makes US Treasuries more attractive compared to Bitcoin as an asset class. And this has caused the price of Bitcoin to fall as a result. Bitcoin has gotten the seal of approval from several fund managers. On the 8th of January 2021, investor Bill Miller said that he expects that the price of Bitcoin can surge between 50% to 100% within the next 12 to 18 months, as investors increasingly add Bitcoins into their portfolio to shield against inflation. Well, at the point of time, 8 January, Bitcoin was trading around $40,000 per Bitcoin, so a 100% gain would be around the $80,000 level. Bill has also added that he is not sure when will the price of Bitcoin correct, but if investors are not ready to stomach another 80% correction like what happened during the 2017 crash, then investors should not consider Bitcoin as an asset. Another investor, Mike Novogratz, formerly of the firm Fortress Investment Group, has stated that Bitcoin is now an institutional asset. But the good thing is that a lot of institutions are still not invested in Bitcoin yet, so 2021 could be better, if not at least as good as 2020 for Bitcoin. Stan Druckenmiller has also said that he has invested in Bitcoin in 2020. This comes after he previously stated in 2019 that he was not interested in investing in Bitcoin. So for him to change his views within a year, I would expect that he has given some thought about this. On the 5th of January 2021, JP Morgan strategists have also stated that Bitcoin can be seen as a rival to gold, and it could hit a price of $146,000 in the long term if Bitcoin manages to establish itself as a safe haven asset similar to digital gold. Apart from the positive commentaries from the finance community, Bitcoin has also emerged as a reserve asset. According to the website bitcointreasuries.org, the Bitcoin Treasuries list expanded rapidly in 2020, with 29 companies holding 1.1 million Bitcoins as their reserves. The trend started to kick off when the business intelligence firm MicroStrategy purchased $425 million worth of Bitcoin in August and September 2020. Its CEO, Michael Saylor, said that Bitcoin can be better than gold, and its ability to shield against inflation has been the contributing factor to the firm's decision to invest in Bitcoin. Following that, payments company Square also invested $50 million in Bitcoin in October 2020. PayPal has also entered the cryptocurrency market when it announced on the 21st of October 2020 that it will be allowing its users to buy, hold, and sell cryptocurrencies via its platform. This has led to a huge spike in the price of Bitcoin because there is a huge volume of PayPal users globally. Apart from companies in the private sector, the use of Bitcoin as a reserve asset has also just started to influence government agencies, with the mayor of Miami, Francis Suarez, saying that he is exploring to put a percentage of the city's reserves in Bitcoin as treasury reserves, stating that Bitcoin has been a stable investment in an incredibly unstable year. There are a number of financial analysts that are worried that the current Bitcoin bull market is just a bubble waiting to burst. Michael Harnett, chief investment strategist at Bank of America Securities, said that Bitcoin blows the doors of prior bubbles. he compared the current Bitcoin booming market to other asset markets that have been booming in the past before they crashed. Such examples include Thailand's stock market in the mid-1990s, the dot-com bubble in the late 1990s, as well as the housing bubble in the mid-2000s before the global financial crisis. All of these markets, they registered triple-digit percentage gains before they came crashing down, while Bitcoin has already registered close to 1,000% in gains since early 2019. Michael did not say that the price of Bitcoin will crash with certainty, but he noted that the surge in the price of cryptocurrencies are indicative of increasingly speculative investing behavior. Another thing that could pose a threat to the continued rise in the price of Bitcoin would be increasingly stringent regulatory requirements. There have been significant pressure from the US Department of Treasury as well as UK Financial Conduct Authority when it comes to the regulation of Bitcoin. If anti-money laundering regulations and know your client requirements become more strict in various jurisdictions across the world, then this would significantly impact Bitcoin's use as a medium of exchange and thus negatively impact its value. Should there be a crash in the Bitcoin market if it happens? Some are saying that it will probably not be as bad as what happened during 2017. This is because of the differences in the nature behind the drivers of the 2017 rally and the 2020 rally. During 2017, the Bitcoin bull market was driven by retail investors that are speculating on Bitcoin and other smaller cryptocurrencies. So the bull run was due to pure speculative mania. While in 2020, the bull run had been driven by institutional funds and large companies looking to use Bitcoin as a hedge against economic uncertainty and inflation. So due to the recently stronger institutional backing, the degree of a market crash, if any, is expected to not be as bad as in 2017. Also, referring to the recent plunge on 11 January 2021, according to Coindesk.com, Bitcoin whales, which are large investors of Bitcoin holding at least 1,000 Bitcoins, they are actually buying during the dip on 11 January 2021, and this is reflected in the number of Bitcoin whale entities recording a new high of 2,140 on 11 January itself. This indicates that a lot of investors still have confidence in the ongoing Bitcoin bull market. So, are you a Bitcoin bull or a Bitcoin bear? Are you looking to buy Bitcoin, hold on to your current Bitcoin holdings, or sell off and take profit? Let me know what are your thoughts in the comments section below. And if you have learned anything from this video, you enjoy it, please click on the like button below and also subscribe to my YouTube channel for further updates. This will encourage me to produce more YouTube videos for you in this area. So do support me, and that's about it for now. I will see you in my next video. Take care and stay safe.